The US-China trade war has escalated again. President Trump has imposed a 125% tariff on most Chinese imports. This is a significant increase from previous levels. China retaliated with its own tariff hikes. China now imposes an 84% tariff on US goods. This latest round of tariffs marks a new low in US-China relations. The trade war began in 2018. It has been marked by periods of tension and attempts at negotiation. The current situation suggests a hardening of stances. The tariff increases have drawn criticism from businesses and economists. They warn of higher prices for consumers and damage to the global economy. The escalating trade war raises concerns about the future of US-China relations. The situation remains fluid, with no clear end in sight. To understand the trade war, we need to look at the numbers. In 2024, the US imported $463 billion worth of goods and services from China. This made China the third largest source of US imports. Mexico and Canada now rank ahead of China. The US exported $199 billion to China in 2024. This trade imbalance is a key point of contention for the Trump administration. The administration argues that China engages in unfair trade practices. Key US exports to China include soybeans, aircraft, and semiconductors. The US imports a lot of manufactured goods from China. These include mobile phones, computers, and clothing. The trade relationship between the two countries is complex and deeply intertwined. Untangling these ties has far-reaching consequences. China has responded forcefully to the US tariff hikes. The Chinese government has accused the US of protectionism. It has pledged to defend its interests. China is committed to dialogue and negotiation, said a spokesperson for the Chinese Ministry of Commerce. But we will not bow to pressure or coercion. China has imposed retaliatory tariffs on US goods. It has also hinted at other measures. These could include targeting US companies operating in China. The Chinese government has also issued a travel advisory. It warns citizens about the risks of traveling to the US. The stock market has reacted nervously to the trade war escalation. The Dow Jones Industrial Average experienced significant volatility. It fell sharply initially, but then rebounded. The Nasdaq Composite also saw large swings. The volatility reflects the uncertainty surrounding the trade war. Investors are worried about the impact on corporate profits. They're also concerned about the overall economy. President Trump announced a 90-day pause on some reciprocal tariffs. This caused the Dow Jones Industrial Average to surge nearly 3,000 points, or 7.87%. This was its largest gain since March 2020. The Nasdaq Composite had its second-best day ever, rising 12.16%. Trading volume reached a record high. Approximately 30 billion shares were traded. This reflects the heightened investor anxiety. Section 5, a temporary tariff truce. The 90-day tariff pause applies a 10% tariff to most countries. This excludes China. The pause aims to create space for negotiations. The pause does not include sector-specific tariffs. It also excludes Mexico and Canada. Existing U.S. tariffs under the USMCA remain for these countries. Treasury Secretary Scott Bessent called the pause a temporary floor for tariffs. He said it allows for bespoke negotiations. The pause has been met with cautious optimism by some businesses. Others remain skeptical about the prospects for a deal. Section 6. Recession fears loom. Economists are increasingly worried about a recession. The trade war is a major factor. It is creating uncertainty and disrupting global supply chains. The risk of a recession is real and growing, said Jamie Dimon, CEO of JP Morgan Chase. He cited the trade war as a key concern. Economists at JP Morgan predict a 0.3% contraction in US GDP this year. They expect the trade war to shave 0.5 percentage points off growth. Imports to the US could fall by at least 20% in the second half of 2025. This is compared to the previous year, according to Hackett Associates. Section 7. Business plans in limbo. The trade war is forcing businesses to adjust their plans. Companies are delaying investments and reconsidering supply chains. Walmart has withdrawn its first quarter operating income guidance. The retail giant cited tariff uncertainty. The pharmaceutical industry is also on edge. President Trump has threatened to impose tariffs on drug imports. This is to encourage domestic production. The trade dispute has even affected the tech sector. ByteDance, the Chinese owner of TikTok, has halted the sale of the app to US owners. This is pending the outcome of trade talks. Section 8. Trump's trade war legacy. The trade war is a defining feature of President Trump's presidency. It reflects his America-first approach to trade. Trump argues that the tariffs are necessary to protect American jobs. He also wants to reduce the trade deficit with China. Critics argue that the tariffs are counterproductive. They say they are hurting American businesses and consumers. The trade war has damaged relations between the US and China. It has also undermined the global trading system. Section 9. The future of global trade. The US-China trade war has raised questions about the future of global trade. It has exposed tensions between free trade and protectionism. The trade war has accelerated the trend of deglobalization. Companies are diversifying their supply chains away from China. The outcome of the US-China trade war remains uncertain. However, it is clear that the global trading system is undergoing a profound transformation. The trade war highlights the need for a new approach to international trade. This approach must be based on cooperation, fairness, and sustainability.